Right now Bitcoin is sitting at $77,712. And I'm going to show you something that most traders are completely missing. While the S&P 500 printed another all-time high yesterday, Bitcoin just got violently rejected at 78,200, and now it's hanging by a thread above 76,770. There is one danger zone and one hidden opportunity today. I'll show you both. Stay until the end. I'm giving out 3 exact entry and exit levels you can use right now. Write this down. The session bias is range-bound with a bearish heartbeat, meaning we are fading rallies until proven wrong. The dominant daily trend is still strong sell, and the structure is telling us that every pop toward the 20-day moving average gets sold. The one invalidation level that ends the entire bearish argument is 78,553. A daily close above that turns us neutral and forces a massive short covering rally. Write that number down. If we break and close above 78,553 today, the whole structure shifts. And the opposite danger number, the trapdoor, is 76,010. If that level breaks with volume, we are not just pulling back, we are accelerating towards 74,000. I want you to put 76,010 on your chart right now because that is where the big liquidity pool sits. Now let's go top down and understand exactly why the market is behaving like a coiled spring. On the monthly time frame, Bitcoin is neutral, stuck in a multi-month consolidation after the parabolic run earlier in the cycle. That neutrality tells you that longer-term players are waiting for a catalyst. On the weekly chart, we still have a buy signal, but the momentum is decaying. The weekly MACD histogram has been contracting for 3 weeks now. That weekly uptrend is your backdrop, but it is not your short-term friend because the daily chart is screaming danger. The daily trend is strong sell. Price is trading well below the 20-day moving average at 78,489, and that level has now become a brick wall. Every attempt to push above it has failed. The 50-day moving average sits at 76,503 and the 100-day moving average at 76,843. Right now, price is sandwiched between the 20-day resistance above and the 50 and 100-day support cluster below. That is classic compression before a big move. The 200-day moving average is way up at 81,897, almost untouchable in the short term, and that gap tells you how damaged the near-term trend really is. On the daily, the RSI is at 48.15. That's below the 50 threshold, and while it hasn't entered oversold territory, it's showing a bearish bias. Every rally attempt gets pushed back below 50. The MACD on the daily is still positive at 305.6, but here's what most miss. The histogram is narrowing, and the signal line is curling lower. That is momentum loss in real time. When daily MACD is positive but rolling over while price is below the 20-day moving average, it often precedes a breakdown, not a breakout. Now zoom into the 4-hour chart. The 4-hour trend has been a buy from the 76,000 bounce, but that momentum is now dying. On the 4-hour, you can see a clear negative divergence. Price made a slightly higher high near 78,200, while the MACD made a lower high. That divergence is what triggered the squeeze that we saw in the last 24 hours. And the core news confirms it. Bitcoin squeezed at 78,200 resistance after a momentum flip on the hourly level. The hourly chart has now flipped to strong buy again on the bounce from 76,700. But that strong buy signal is exactly what creates the trap. We have an hourly bull flag bumping into a daily wall. Here's what most traders miss. The moving averages are not just flat lines. They are magnets and resistance zones. The MA5 is at 77,718. Price is currently just below it, confirming intraday weakness. The MA10 is at 78,269, so any push towards 78,200 is meeting the MA10 and the psychological resistance simultaneously. The MA20 on the daily is at 78,489, just above our known resistance. So to get bullish, price has to chew through 3 layers of moving average density, the MA5, the MA10, and the MA20. That's heavy. The daily support numbers you need to have on speed dial are 76,773 and 76,010. 76,773 is the initial floor, the level that held the overnight dip. 76,010 is the structural support, the bottom of the recent range, and a level that if lost, activates a measured move straight to 74,000. Resistance above is 78,044 and then the critical 78,553. These are the boundaries of the battlefield. Now, connect the dots across assets because Bitcoin is not trading in a vacuum. Bitcoin is the risk asset shadow. While I was watching the tape yesterday, the S&P 500 broke out to fresh all-time highs, and Nasdaq futures were green. Usually, that would drag Bitcoin higher. But it didn't. That divergence is the loudest signal on the chart. When equities are risk-on and Bitcoin is failing to participate, it's a massive red flag. It tells you that crypto-specific liquidity is thin and that institutional money is rotating out, not in. ETF flow data confirms this. We saw net outflows for the third consecutive day. Spot Bitcoin ETFs shed roughly $80 million on Tuesday. That's not a panic, but it's a steady bleed, and it matters because those flows were the engine of the bull market. When the engine sputters, price drifts lower, and then there is the funding rate trap. Perpetual swap funding rates flipped slightly negative overnight. That means shorts are now paying longs. On the surface, that sounds bullish, a potential short squeeze if price rallies. But here's the darker reading. Funding rates going negative during a bearish daily trend often indicates that the market is getting heavily short, and while a squeeze can happen, the more common outcome is that price grinds down, trapping early shorts who then add fuel to the downside when stops get run. If we break below 76,010, those late shorts get rewarded and the negative funding becomes a momentum cascade, not a squeeze. However, if price somehow reclaims 78,553, the entire positioning gets inverted and we see a violent liquidation of those shorts toward 80,000. So the funding environment is a powder keg. It will blow in whichever direction takes control of the 78,553 resistance. Yesterday's ECB speaker didn't move Bitcoin directly, but the broader macro picture is quietly tightening. Bond yields are creeping higher, the dollar index is stable, and that historically pressures risk assets like Bitcoin. The next 2 weeks lean bearish, targeting 74,000 as long as 78,553 remains intact. The event that would blow up that thesis is a daily close above 80,000. If that happens, the bear case dies and we must flip long immediately. Until then, I am fading strength. Most people will skip this next part, but this is where money is made. Keep watching. I'm going to give you 3 specific trade setups, from conservative to aggressive, with exact entry triggers, stops, and targets. Use them as your decision support. Strategy 1. The sniper. This is the conservative play, built for the patient trader who wants to align with the daily strong sell trend. The idea is to wait for a breakdown and then sell the retest, not chase. Here's the trigger. We need a decisive 4-hour candle close below the 76,770 support level. Not a wick, a body close. Once that happens, you wait. Wait for price to retrace back up to the broken level and use 76,770 as new resistance. When price touches that zone and shows a 15-minute bearish engulfing or rejection wick, you enter short. Exact entry. Level is 76,770. The stop loss goes at 77,700, just above today's intraday high and above the 50-day moving average, giving the trade room to breathe without being stopped out by noise. Target 1 is 75,200, where we take off 50% of the position. Target 2 is 74,000, the big round number and measured move. Let's talk risk-reward. With an entry at 76,770 and a stop at 77,700, your risk is $930 per Bitcoin. Target 1 at 75,200 yields $1,570 of profit. That's 1.68 times your risk. If price reaches target 2 at 74,000, you capture $2,770, a 2.98 risk-reward ratio. The setup is void if Bitcoin recovers and breaks above 78,000 before triggering. because that would suggest buying pressure is overwhelming the breakdown scenario. This sniper setup relies on patience. You might wait all session and not get filled, but that's the point. We only take the highest probability kill strategy to the active trader. This is for those who want to play the hourly strong by momentum and the support bounce, but with the understanding that we are countertrend trading against the daily sell. The entry condition is a bounce off the support cluster between 76,800 and 76,770. You don't buy blindly. You wait for a 1-hour candle to form a clear bullish rejection wick or a hammer right at that zone, and then you enter on the next candle open. I'm setting the exact entry at 76,800. The stop loss goes at 76,400, just below the overnight swing low and the 100-day moving average. That's a $400 risk. Target 1 is 78,200, the scene of yesterday's squeeze. When that first target is hit, immediately move your stop to break even, locking in a risk-free trade. Target 2 is 79,000, the next intraday resistance cluster. The math on this one is extremely attractive. Risk 400 to gain 1,400 on target 1, which is a 3.5 risk-reward ratio. If target 2 is reached, reward is 2,200, a 5.5 ratio. But remember, the daily trend is bearish, so if price shows hesitation near 78,200 and the 4-hour candle starts wicking, take profit early. This is a mean reversion scalp, not an investment. Don't marry it. Now, before I reveal the high-risk aggressor play, let's see how aligned we are. Type your Bitcoin range for tomorrow in the comments right now. I'm reading them. Give me the high and the low you're watching. This interaction lets me tailor the next video to the community's pain points, and it helps the algorithm know we are delivering real value. Drop your range. Strategy 3, the aggressor. This is high-risk, counter-trend momentum chase, and only for those who know how to lose small and manage risk aggressively. You do not take this trade unless you are fast. The setup is a breakout above the resistance wall. We need an impulsive 15-minute candle that closes above 78,600 with volume at least 30% higher than the average for that time frame. If that happens, you enter long immediately at market, expecting to chase a liquidity grab toward the 80,000 region. Entry is at 78,600. Stop loss is tight at 78,200, just below the breakout point. That's a $400 risk. Target 1 is 80,000, a $400 gain and 3.5 risk reward. Target 2 is 82,000, where the 200-day moving average begins to loom as overhead resistance. If target 1 is hit, book 70% of the position and trail the remaining 30% with a stop at 79,400. The warning here is stark. If this breakout is a fakeout, the trap will be brutal because the daily structure is still bearish. A failure at 78,600 will likely cascade back to 76,800 within hours. So if the 15-minute candle closes back below 78,400 after you enter, you exit immediately, no hesitation. The aggressor setup dies the moment the S&P 500 starts selling off intraday, so you must watch the equity screen while in this trade. I cannot stress this enough. Only trade this if you accept that you might get stopped out in 5 minutes. Never risk more than 1 to 2% of your account on any single trade. No positions through high-impact news events. Stops are non-negotiable. If you do nothing else, I say, honor your stops. Let me leave you with the one critical level for the next session. 76,010 is the absolute line in the sand. If price accepts below 76,010, we are looking at a rapid move towards 74,000 and possibly a retest of the 73,000 zone. That's the level that changes everything. Tomorrow, we have US GDP data coming out, and that will directly move the S&P 500, which will drag Bitcoin regardless of what the charts are saying. I'll be here breaking down the numbers and giving you the updated levels before the market opens. If you want the full breakdown on the S&P 500 divergence and how to trade the equities crypto fracture, that video is live now on the channel. Check the end screen, click through, and complete the cross-asset picture. Smash like if this analysis gave you a clear plan for today, subscribe and hit the bell for daily coverage of 8 key assets. I'll see you in the next one.